Good afternoon, everybody. Welcome back to Market Insights with Linux, and welcome to this new video, a little bit of a different video. Wanted to talk about the S&P 500 or SPX, SPY, whatever you want to call it, whatever ETF you are accumulating. And if you are not doing that already, then start doing it. All right. I know it's very boring advice, but it's one of the best things you can do, and it's also in my short life, it's been one of the best financial decisions I've made since 2018, which I know. During those years, we've seen some amazing returns. I mean, from the time I started accumulating that, when I started accumulating the S&P 500, I think the prices have gone up. Not even sure how much, but they've gone up by about 130%, which is obviously a great return in 7 years. But I still do think that it's one of the best and lowest risk ways to invest your money. So in this video, what I wanted to do is first of all start off with a bit of a prediction, what I think is most likely for the S&P 500, which just to start off with, it's going to be very difficult to do that. Obviously, there's quite a lot of uncertainties right now in the world, and then I'm not only talking about economic uncertainties with tariffs, but also what these tariffs will do, right? It could really go both ways. I mean, these tariffs could also be incredibly beneficial for the US. And then, I mean, the S&P 500 is going to skyrocket, right? But the thing is, and I've read a lot of research and academic papers on tariffs, historically, it's just quite uncertain and very, very difficult to measure what they're going to do to the economy. And outside of that, we also have a lot of geopolitical tensions, of course. But I'll start off with what I think is the base case for the S&P 500 in terms of price action, and then we'll talk about some levels where I think you need to buy the S&P 500, and those are mostly based upon high time frame support zones based on multiple indicators, but still multiple support zones, and that's very much based on technicals, right? And I have kept in mind the uncertainty and what's all possible. But yeah, that's it for now. So let's get right into it. First of all, I think you should DCA into the S&P 500, right? And obviously, past returns are absolutely no guarantee for future returns. But when you go over different ways to invest your money at this point of time, yeah, maybe you can put it into a money market fund that pays out relatively well still at this point of time. That is not the worst decision, because then you can always still put that into stocks, but ultimately, at least where I'm from, real estate, I don't think is the best idea anymore, but that's also partially legislation. And when we're talking about other investment vehicles like art, that also doesn't seem to be doing that well anymore, at least recently. So, in my opinion, still one of the best ways to invest your money. Personally, what we have seen after the pullback since the 20th of February, we have recovered incredibly well. On the 12-hour time frame, on the daily time frame right here, what you can see is that we have recovered the uptrend, right? By breaking above this level at 5,700, we have recovered the uptrend. And everything is looking good. I mean, not only is the uptrend holding, but we've also broken above a key level right here at 5,700. And all the rolling VWAPs are in our direction again, right? Where they essentially pulled back for a brief moment here. They're looking good again right now. So ultimately, at this point of time, this is obviously reliant and dependent and contingent on the geopolitical circumstances and economic circumstances not becoming incredibly much worse. But I think continuation up to the previous all-time highs and, rejection from there, maybe some consolidation, but ultimately continuation is still most likely at this point of time. All right. And then, and we'll talk about that when we'll talk about these buy areas. Then eventually we can drop down lower if circumstances change, right? But for now, I'd say that is the base case, what we see right now, also based on the technicals. So that brings us to my first buy area, and that is very simply said, the strongest support level we have right now at 5,700. Now, like I said, and I do want to stress that, I think you should DCA in the S&P 500 either way, right? But what you can always do is, let's say you want to put $1,000 into the stock market every month, you can always just DCA 75% or 50% of that, and keep 25 or 50% in some sort of a money market fund, which most stockbrokers also have an option for that on their platform, right? So it's very easy to do. And then just keep that, right? Keep that in a money market fund, yielding about 3-4% per year. and put it into the markets at great support areas such as 5700. That is the main buy area right now. Now, if my prediction is correct, we're not going lower than that. That's going to be the support. Maybe we'll spike down a little bit lower. We have the yearly rolling VWAP at 5550. That's another great buy area. But in the case that we actually do see some sort of an escalation geopolitically, or we see more downturn economically, I would say these are the main levels to look at. First of all, 5300, strong support level, imbalance, high time frame support level based on multiple things. Great support. Then outside of that, we have a high time frame Fibonacci level right here, and we are close to a psychological level at 4900. That's another area where I would buy. And then based on the highest time frame right here, this level at 4600. Those are the areas where I think we will at least see a bounce, which makes it over time on average a better area to buy the S&P 500, right? But that is in the case that we will see a further pullback. In that case, I think you should be ready for levels that low, as we have also seen here at the end of the 6th of January, where we also pulled down roughly that amount. Same thing after Corona, the 20th of February 2020. If we do not do that, keep these DCAing every month. Like I said, 5700 is a great buy area. And then if we are able to break out above 6100 and we start to rally up here, I would say a retest into that area is a great buy area as well. But that is for the future. Those are my thoughts on the S&P 500, SPX, SPY for now. If you do have any questions, make sure to ask me down in the comments. You can also join a Telegram channel we have for free for daily market updates. But for now, that's it. So thank you for watching. Take care and bye.